Hello, my name is Steve Bigelow with the Candlestick Forum. We've got some very strong patterns still performing in this market. Right now, as we can see, the Dow, when it bounced up off the bottom of this wedge formation, made the 200-day, the top of the wedge formation, the next likely target. It came up strong on Friday, but backed off near the close. However, the NASDAQ, after doing a J-hook plus, after the J-hook plus, which is a J-hook pattern that can be identified as supporting off a level that everybody else is watching, made the prospect of the NASDAQ coming up here to the 200 the next likely target. Well, on Friday, it went through that target. Also, this resistance level, a wave 1, wave 2, wave 3 implies there's still more upside. So as of now, the J-hook pattern plus is working. Same scenario on the S&P 500. J-hook plus bobble breakout through the 200 also has broken this downtrend resistance level with positive trading on Thursday and Friday. So the implication should still be wave 1, wave 2, wave 3 still showing more upside, giving us at least a couple more days to the upside. Now, there was a big move in the electric vehicle stocks on Friday with a rumored breakout or a rumored buyout of Lucid. But again, the patterns, the J-hook patterns are the most prevalent patterns you want to look for. So remember, we've got a 2-week free trial going on where if you come and join us, it's free. And the marketing strategy is if you just see the logic that is built into candlestick analysis and how high probability patterns continue to work because of one basic function or factor, is that human nature works the same way time after time. So try us out. I mean, they've got nothing to lose. And if it clicks for you, which it should, you're going to have a view of price movements that you can analyze with much greater ability for the rest of your trading career because of human nature price moves. So the electric vehicle sector, when Lucid had a rumor of a buyout, that's gotten interest back into all the electric vehicle stocks or the charging stations, as in Blink, or the lithium battery stocks. So take a look at that whole sector. But more importantly is the J-hook pattern. We reiterated a buy on AUPH because we know wave 1 and wave 3 are usually the same magnitude. And you can see where the T-line becomes a very effective trend indicator. Notice when they pulled back to the T-line, they couldn't close it below the T-line, and you could start seeing that J-hook pattern setting up, coming back up through the 200, not only coming up through the 200, but backed and filled, tested the 200 and came back up. So high probability trade setup, we're heading higher. So you can use that information that if you see a pattern, like a fry pan bottom, and then your bobble breakout, one of your J-hook patterns, at least you can figure that your next target is likely going to be the 200, kind of correlating with the recent highs. So another 2+2 analysis. If you know what the effects of a belt hold signal is, as in our recommendation a couple weeks ago on RSKD, that belt hold basically told you there was bulls and bears, bulls and bears, bulls and bears, and bam, the bears took control, but the bulls sopped up all that selling, took out all the sellers, which now means there's less sellers in the way, usually implying more upside. So when you use that information, as we saw in Amazon, where it came right back to the 50 after opening much lower and doing a belt hold signal, telling us they wiped out a lot of the sellers, that J-hook pattern became that much more evident, implying that if this is wave one, wave three is going to take us higher. So even if you're not trading Amazon, if they're buying Amazon, that means the bullish sentiment is still prevalent in this market. So this is where you use 2+2 analysis, a fry pan bottom, a failure right smack dab at what everybody would be watching as a resistance level, the 200-day moving average, a pullback right back to the 50, and then doing a J-hook plus, and then doing a bobble breakout. When you add all this together, the implication is there's a very high probability wave three is about ready to start. Use that same analysis on a recommendation of EHTH before they pulled back, and then did a best friend signal, bobble breakout, followed by a doji sandwich on Friday. Now, this doji sandwich was kind of anticipated because you had a big price move, best friend signal, and a doji. If it started trading positive, the prospects of this price move was going to be that it was going to be pretty close to the same magnitude as this move right here. So this is how human nature reacts the same way time after time, no matter what you're trading. If you're trading stocks, bonds, currencies, futures, we're going to be doing a mini spotlight training on Saturday, February 4th. They're very inexpensive. They're supposed to go for an hour. They usually go for 2 hours, but you get a lot of information that if you're a stock trader or a commodity trader or want to be one of each. Remember, the Japanese rice traders became legendarily wealthy trading the most boringest commodity in the world, rice. And they did it on one premise, that human nature works the same way time after time. That'll be it. We'll see you in the chat rooms.